does for us is it gives us an edge. It gives us a probability. Whether we like it or not is therefore not the question. That's what the edge is, based on the frequency of the arrival rate. And we know that the frequency of the arrival rate is real. It's real. We've had, well, we can think about it logically that it's real. If you want to get size on a contract, you've got to buy a lot of contracts. I mean, it's got to be real, right? We've also seen the Fed papers on the arrival rate of orders. You've seen the power of the Voltics. When the right Voltic appears at the right price, magic starts to happen. So there's a lot of real things coming in. A lot of real things coming in. But the point is, that's what the spectrometer picks up on, is the arrival of frequency. That's what it is. That's what it does, is it transforms the arrival of prices, and it gives you a probability distribution in real time as that's developing. And the idea is that that transforms into a normal distribution, which we then look at from a probability point of view. And if you've got a probability edge, you execute against it. And that's all it ever is. That's all it ever will be. Okay, so my concerns about the smart money guys, they did buy the open, so they've been selling into the open, small change, but they have bought into the open itself. Again, still kind of small change. They've not gone heavy on it, but they have bought the open. So just to bring you up to date. Kind of had a few about the fund desks buying. Did I not see somebody mentioning about they're still buying into the highs? Who said that earlier? Somebody said that earlier. Who was it? There it is. It was Jerry V. Jerry V. Stand up and take a bow, Jerry V. So if you look back at what Jerry said very simply, commercials are still buying the S&P at the higher prices. Dead obvious, right? So when you see the NASDAQ, whether it's the S&P or the NASDAQ, look, are the commercials buying at higher prices based on the pink line? What do you think? Are the commercials buying at higher prices based on the commercial line here? Yes, they are. Do you want to be a buyer of higher prices, Jerry? Do you want to be a buyer of higher prices? Well, I would argue that you certainly do not. Why would I argue on the NASDAQ that you didn't want to buy higher prices? As in higher prices, as in buying into this uptick phase. Because there's too many buyers in here, isn't there? There's way too many buyers in this market at the moment. So the one thing I don't want to do is I don't want to start paying these types of prices in this area here for a BSG squeeze or a tipping price. Because there's so many buyers, I'm going to draw a line against that demand and look for supply coming in there and buy from that supply there. Or at least try and buy on the way down. If it doesn't reach that supply, then take a shot at it very quickly to try and at least give myself some range to get to the top edge, because there's so many buyers in this. So many buyers in this. So when we kind of consider that part of the NASDAQ, this becomes a very, very nice buy, and it's a trade that we actually had down here at 940 anyway, so we're already in it. And it's went 940 to 340, guys. That's a 400-point move, or $8,000 per contract, $8,000 profit per contract. And yeah, it's pretty good, isn't it? And remember, we had a conversation about that trade. And, well, it paid off, did it not? Paid off big style. Lots of sellers on the S&P. So you could buy the S&P pretty much anywhere. You wanted to make sure you got that absorption on the S&P here. So you see they're selling here, and the commercials are buying from them in this area here. Brilliant buy trade, and sure enough, another $2,000 profit using the red line, blue line combination. Unbelievable profits, isn't it? Unbelievable profits by just using the stuff that we teach in the room, guys. Nothing else. No smart money concepts. No Fibonacci extensions. No wave counting. Just high probability trades in grey areas.